that. But assuming that the US government is right and doing these sanctions is going to be effective, keep in mind the Chinese government is not going to allow US competitors to take all of their domestic Chinese cloud business. They don't want the US providers in there. So, in the kingdom of the blind, the one-eyed man is king. If Ali Cloud runs at 80 or 85% efficacy to AWS, but Ali Cloud is the only one you can use in China, they're going to get 100% of the business, right? So, if you look at the McKinseys of the world, when they talk about the cloud computing opportunity in China, and they say it's going to triple by 2025, even if they're off by a year, Alibaba's got 38% share. All things held equal, I've never seen a better value per dollar with a moat of a business than I see in Alibaba.
Thanks everybody for tuning in again. And if you're new to the channel, welcome. My name is Marcel. This was a recorded interview with Mr. Tom Hayes from Great Hill Capital. And I've had 2 parts already online. As promised, today I'm publishing the last part, which is focused a little bit more around the topic of Alibaba Cloud. But of course, we also had a couple more questions around the Chinese economy and investing in Chinese equities. So I hope that was helpful. If so, please leave this video a like so it comes in front of more viewers. And if you find this information valuable, why not subscribe to this channel if you haven't yet? Because only this way you will be sure to not miss out on any new interviews or topics that are related to investing into Chinese equities. So with that, I hope you enjoyed the last bit, and then thanks for watching again, and see you in my next videos.
In theory, all things held equal, I've never seen a better value per dollar with a moat of a business than I see in Alibaba. But so if I was 100% certain, why wouldn't we just be 100% in Alibaba, or leverage one time and 200% in Alibaba and forget the rest? Because you can't control the timing. You can only control the process. So if I've got 8 to 12 great companies that are all increasing intrinsic value, increasing cash flow per share, increasing in earnings per share, increasing revenue per share, growing their moat on their business, some are going to pop overnight. Like we've got this one company, Cooper Standard, which was a special situation that was up 4x within 12 months. Okay, so that's really good. But it's the same process as I use to be in Alibaba, which may be up 3x in 3 years when all is said and done, or 4x in 3.5 years or 4 years. The only difference is going to be the IRR. But the key is the process works. If the business keeps growing and the price stays same, eventually the price will catch up to the intrinsic value. And that's our model. The difference is some people are impatient. Some people go on leverage and they get blown out. And the ones who are patient wind up being the David Teppers and the Dan Loebs of the world, who get it right and have patience and get the best companies when they're on sale, and make a lot of money for their investors.
Maybe a personal question, because as I mentioned, you also always speak about your social life on your YouTube channel, which is great. And I'm just wondering, like, you're out there pretty alone, like pounding the table for Alibaba, sometimes Chinese equities and so on. Must be pretty lonely, and it's getting very political, right? So what do you say to those who say, like, well, there's no way American investors will touch Chinese equities again, or Wall Street coming back into the sector? Do you get this question sometimes?
Yeah, opinion follows trend. I mean, they won't touch it until the price goes up. And then when the price goes up, they'll start to get fear of loss, and then the price will go up some more. And at around $180 or $200, they'll all start to get interested but skeptical, be waiting for a pullback that never comes. And then around $250 on every single talk show, every single analyst you're going to see on TV every day of the week is going to be talking about the Alibaba's the greatest thing in the future. And after it's already up 300%, they're going to be talking about how this could be a multi-bagger over the next few years. And it'll be that time period when everyone's super excited between 250 and 300, and they all can't get enough of it, that will be helping them out and laying off some of our shares. And that's the way it works every single time. They won't invest in, there's actually one that is has been very outspoken on Alibaba, a public figurehead, particularly when it was at $60 last year, couldn't hate it enough. And now at $100, he's starting to buy it. So why is he buying it? Because a big name guy is in it that he likes and respects. So they all follow. It's all a herd. It's a herd to the downside. It's a herd to the upside. The game is just getting started. What will be the most fun is when we're back up at $120 and you have all the pessimists that are going out, and they'll tell you it's going right back down to 60. And once you get consensus that it's going down to 60 is when we go straight to 180 and leave them in the dust. And by 180, those exact same names will come on and say, we just started building a position. We feel very comfortable about the future prospects. We think it can be a $500 stock, yada, yada, yada. I mean, history doesn't repeat, but it rhymes. So with all the pessimism about how you can't invest in China, just wait till it's up 50 points. All of a sudden, that'll be rear view mirror. People will forget it, and they'll all be chasing like the herd because of FOMO. And then, hopefully a few of them will actually understand the fundamentals and realize the true potential of the business.
Okay, I don't want to take up too much of your time. It's great to have you and all of these insights, but I want to give you a little bit more chance to go more in specific of Alibaba and talk more in detail here with my last question, which is about, it seems that this company is also quite hard to understand for investors because it's simply so big, right? And Alibaba has now just started to split up a little bit, and maybe that's also confusing investors on top of that. So do you think there is an issue with fundamentally analyzing and understanding this company, and maybe that's also what's suppressing the value in a sense? Because, for example, how do you ascribe a value to the cloud business right now and to the AI opportunity in China and so on? How do you do it? And do you think that's an issue?
Yeah, I think that's a great question. I think the more noise is about Xi and his policies than it is about the business. Because if you can understand it, if you can understand Amazon in the United States, you can understand Alibaba in China. The only difference is, Amazon's trading at 60 or 80 times earnings, which, by the way, we own Amazon for similar reasons to what we own Alibaba. We just were buying it in the fall when no one wanted it. Now everyone wants it. It's probably going to pull back a little bit, but we're not going to do anything because we own it for the long term. But as it relates to Alibaba, it's trading at 11 times forward when it's historically traded at 23 times forward, and it's trading at 11 times forward of depressed earnings expectations and depressed cash flow. So, if you look at the McKinseys of the world, when they talk about the cloud computing opportunity in China, and they say it's going to triple by 2025, even if they're off by a year, Alibaba's got 38% share. You got a lot of knuckleheads on Twitter saying, "Oh, Alibaba's losing share." Number one, you're missing the point. If you're worried about share, your view, number one, they're not losing share. But number two, if you're worried about share, you're thinking that it's a fixed pie. And the point is that the pie is going to get 3 times bigger, and it may be exponentially bigger, much bigger than you or I could even imagine when you consider the compute power demand being unlimited as these large language models. And then you got, and Alibaba's in a position, they're going to get everyone on it at very low margins and then sell them all of the AI overlays where the margins are, basically 100%, and sell them all these services. So I think what's hard to understand about Alibaba relative to AWS is when you look at China being about 5 years behind the US in terms of digitization of their businesses, and you look at the AWS model from 2016 to 2021, Ali Cloud is basically where AWS was in 2016. So just following that trajectory, Alibaba will have another $10 billion of operating income over the next 3 to 5 years just from the cloud. And that's 10 billion over and above what they had several years ago when the stock was trading at $320. So if you have 60% more operating income than when the stock was trading at its peak. But the problem with that analysis is that AWS did not have the growth opportunity of AI and all the unlimited compute power of the large language model, generative AI, et cetera, that Ali Cloud has prospectively. So we may be underestimating the opportunity of AWS on a of Ali Cloud on a go forward basis. And by the way, of AWS as well, but we're not here to talk about Amazon today. But certainly for Ali Cloud, which will be on a standalone basis, and that multiple is going to be very aggressive as this thing goes and as it starts to take off and hit on all cylinders. So, we are where we are. We're in a holding pattern. We're waiting for a couple catalysts. What are the catalysts? Number one, emerging markets need to work. How do emerging markets work? Fed gets out of the way, dollar goes weaker. Mm-hmm. Once that happens, you get the flows. Once you get the flows, you get some price appreciation. Once you get price appreciation, you get analysts paying attention. Then analysts actually start to look at the business versus the headlines. Then you get some catalysts from China on stimulus because sooner or later this is coming to a head. I think we're right at the head, just like I thought we were in December and January with COVID. I said people aren't going to take this anymore, and sure enough, we had the riots in the streets, and you walk up, and the comical thing was, you walk up. COVID's over, and we're all thinking, God, is he going to weld them back in their apartment next week, or is he actually going to, let them stay? And then 3 weeks later, oh, there's a COVID wave, and all of us idiots in the West were like, okay, in 3 months there's going to be the second COVID wave. There was one COVID wave, and that was it. COVID was over. They've got no vaccine, no real vaccines, and somehow miraculously COVID was over in 3 weeks. And they wasted 3 years locking them up in apartments. They could have done this, 3 years ago. But leaving that aside, there are always political considerations and timing, and the timing that he had last November, et cetera. But I think all of that's in the rearview mirror, and I think this is kind of the last test and the last opportunity for those who aren't positioned, and then we start to focus back on fundamentals. So it's going to take price moving up, and price moving up is going to be a function of the dollar, function of the Fed, function of wholesale flows into emerging markets, which is certainly the back half of the year story in our view. And then some policy tailwinds from the Chinese government, which they'll have to do whether they want to or not. And then these businesses continue to execute on all cylinders, whether it's Nike or Win or MGM China or all the others, or Yum China talking about how great the business has been in China the last 8 weeks, or Alibaba themselves with the earnings. This is just the beginning, and I think more of that will be realized as Alibaba breaks up into the 6 parts and you start to get good valuations for each part of the business. Mm-hmm. But none of that happens until you get the wholesale flows into emerging markets, which is China. That's a function of the dollar and the Fed. That's an imminent thing in coming weeks. Then you get a little tailwind from the Chinese government. Then you get some focus on the fundamentals. Then you get the analysts going. Then you get the FOMO. And all the people who wouldn't buy it at 60 are now, begging to buy it at 120. Then you get a pullback to shake all those weak sisters out, and then we start to make our way to, back to 180 and beyond. And then you get all of the most negative people at 60 and 100 that can't get enough at 250. And then we'll be doing this, and I'm going to be talking. Everyone's going to be super exuberant. All the Twitter is going to be China, China, China. And I'll be on and say, yeah, we just sold 20% of our position. You're going to be like, what? You're Mr. Alibaba. Like, how did you sell 20% of your position? I was like, well, it's 280. It's fairly valued. We'll hold the other 80% until people get super exuberant. But, that's where we are now. And we'll go back to this video in a couple of years, and we'll be like, I can't believe. And I'll say, what do you mean you can't believe? Of course you can believe. If you own the apartment and the rents went up 800%, you would have never sold at $100. And that's exactly what we're talking about here.
So good to hearing this from you, Tom, because I fully agree with that. But maybe one more question, if you have the time, regarding your AI opportunity for Alibaba, because investors would say, well, yeah, we see the potential. However, there is also the US Chips Act, which basically limits some of the exports of the most powerful chips. So what makes you believe that they can really execute operationally on this opportunity? Do you have some thoughts on that?
Yeah, that's a great question, by the way. There was an expert on, I'm trying to think who it was, but he basically said they have all of the chips they need to, number one. And number two, the unintended consequence of this CHIPS Act is it's gotten all of the Chinese chip makers accelerated and supported by the government to replicate them sooner rather than later. And even if they can only replicate, 70% of the value of what we get from NVIDIA or soon to be Intel or others, it's more than enough. They'll basically just need more of them to have comparable performance. But at the end of the day, or even if they're modestly slower, they can still perform the same basic activities, even if it takes a hair longer or slower, assuming that they won't be able to gain access to the technology. And I would never count the Chinese out from being able to get their hands on it and reverse engineer it, because they've proven over and over they know they can figure out a way to do that. But assuming that the US government is right and doing these sanctions is going to be effective, keep in mind the Chinese government is not going to allow US competitors to take all of their domestic Chinese cloud business. They don't want the US providers in there. So, in the kingdom of the blind, the one-eyed man is king. If Ali Cloud runs at 80 or 85% efficacy to AWS, but Ali Cloud is the only one you can use in China, they're going to get 100% of the business, right? So I think it's on a relative basis. Even if the product is only 90% as good as the US version because of the chips, which I don't think will be the case, but assuming it is, if all you can buy, if that's the best that you're allowed to buy where you are, that's the one that you're going to use. And I think Alibaba is going to be the key beneficiary of the trend in that direction. And again, we continue to focus on AI, but if you look at the AWS trajectory and the digitization trends, leaving AI aside, which is the hyper-growth opportunity moving forward, they still have so much catch up in the basic cloud computing services.
Tom, thanks so much for coming on the channel again. I'm pretty sure we go back, as you said, and watch this video and see like everything you said turned out the way it has, because that's what happened last time as well. So I'm happy that you took the time again. Tell our viewers again where to find you, and then I hope to hear again from you very soon.
Yeah, well, first off, I want to thank you. And you and I go back now sometime, and we've enjoyed this bottoming process for the last year plus. I will say you have a very special audience and a very special channel that you've built, and you deliver a lot of value to your listeners. Anytime I go on with you, the engagement and the interest of your group and the activity of your group around it is just superlative, and seen very few other places. So you've built a bond, and you've built a tremendously independent thinking audience who are willing to look outside what is being fed to the herd and think for themselves. And I think that's a very valuable service that you're providing to people, and it's reflected in the growth. So the best way to reach me is on Twitter. The handle is @hedgefundtips.com. The website for the weekly research is hedgefundtips.com. And also you can go to YouTube and just type in Hedge Fund Tips, and you'll find Hedge Fund Tips with Tom Hayes, our weekly video cast, or go to wherever you get podcasts and put in Hedge Fund Tips with Tom Hayes. Very grateful to be here. Always a pleasure, Marcel. Thanks for having me.
Thanks again, Tom, and have a good one.
Bye-bye.